But we begin, like we did yesterday, with some breaking buy news. New moves by our investment committee. And let's plug in, because Josh, you are moving into the EV space.
I guess I hadn't thought about it as a sector bet, but I've been following ChargePoint Holdings for quite a while, and I hadn't really listened to a conference call from the company yet. I think this is only their second one since being de-SPACed, or maybe their third. But I really liked what I heard on the call, and although the stock was up this morning, I bought it anyway. I don't need to pay the lowest price. But it's sort of a trade for now. It may turn into an investment. I don't have a lot of it. I'm going to use 20 as my stop loss. If it breaks back below 20, I'm wrong. But I think that's pretty solid support if you look back to April. That seems to be where the buyers have come in. They beat on revenue. Revenue is the only thing that matters. This is a company that sees themselves as being the enabler of the EV revolution. In terms of charging stations, like over 100,000 places that people, corporations, etc., can charge their vehicles. So I don't really want to bet on like Volkswagen versus Tesla versus Benz. To me, that's boring. This is really exciting. The company that's building out the infrastructure. By 2030, it's estimated that something like 30% of all light vehicles sold will be electric vehicles. Even if that's overstated, let's say directionally it's right, and it's only 20% or 15%, that's going to mean a lot of charging stations and a lot of needed infrastructure. And to me, this was one of the better pure plays to capture that. So I'm in the stock. We'll see what happens. And I'm still learning about it. So I don't want anyone to just like blindly follow me in. Please do your own research, and please think about whether or not it makes sense for your own portfolio. Just because it makes sense for me, it doesn't necessarily make sense for you.
Well, it's a good point. You got 20 as a stop loss. Stock's up 10%. Very quickly, though, Josh, I guess to maybe raise a little money, or at least as part of the other side of the trade. Bristol Myers, you sold it. How come?
I bought it on technicals, and it was breaking out, and it didn't work. So I'm selling it probably $1 or so lower than where I bought it. And when you're buying things on technicals, you can't get overly invested in stories. You bought it for a reason. The reason is no longer valid.
Yeah.
You get out. Doesn't mean the stock can't go up. It just means that the particular trade that I had on didn't work, and that's okay. It happens all the time. We don't play this game for batting average.
Well, their logo works because it's like
Twitter nonsense.
Their logo makes sense. It's a hand.
Yeah, it's about what
you're waving goodbye to Bristol Myers.
I think the key thing is the way this game is played well, and Pete and John will explain this to you. Like many of the people we have on the show, Joe Terranova, Steve Weiss, they understand this. It's not batting average. How many things I'm right about, how many things I'm wrong about. It's how much do you make when you're right, and how much do you lose when you're wrong. And if your process doesn't allow for you to buy things and then change your mind or be wrong, then you're not seriously a market participant. You're an amateur. So trades you put on, the reason goes away. You have to be a grown-up and say, okay, I got this one wrong, or things have changed, and move on. So that's where I am with Bristol Myers.
Okay.